Let's break it down. Alright, let's talk about Forex. You've probably seen the ads online. They show people on yachts making tons of money with just a laptop. But what is it really? Forget the hype for a second. Forex is short for foreign exchange. It's the market where you can trade different currencies from around the world. Think of it like this. When you travel, you exchange money. For example, you might trade US dollars for Japanese yen. The price you get for that trade changes all the time. Forex trading is betting on which way those prices will go. It's a huge market, bigger than the stock market. It runs 24 hours a day, 5 days a week. Okay, before you even think about putting a single dollar into a Forex account, you need to understand some ground rules. These are non-negotiable. First, you need to know what a pip is. A pip, percentage in point, the tiniest price change a currency pair can make. Usually the fourth decimal place. This is how you measure profits and losses. Second, understand leverage. Leverage lets your broker lend you money to make bigger trades. It can amplify profits and it can amplify losses. Third, know the spread. The spread is the small fee brokers charge. Look for a tight spread. Fourth, get familiar with currency pairs. You always trade in pairs. EUR USD, GBP JPY. The first is the base, the second the quote. Fifth, understand margin. It's your deposit to cover losses. Ignore at your peril. Sixth, pick a regulated broker. Do your homework. Seventh, start with a demo account and practice months before going live. Let's have a serious talk about risk. Anyone who tells you Forex is easy money is either lying or trying to sell you something. Let's say you have $100 and you use 101 leverage. You then control a $10,000 position. If the trade moves in your favor by 1%, you double your money. But move against you by 1% and you lose the entire $100. High leverage is extremely dangerous for beginners. Market volatility is another huge risk. A political announcement, a natural disaster, or a surprise economic report can move markets in minutes. These black swan events can wipe out accounts even with safety measures. You can't control these events. You're trading in a global arena. Not all brokers are created equal. There are scams. Unregulated brokers might block withdrawals or manipulate prices. Choose a broker regulated by a major authority. How do you protect yourself? Use a stop loss on every trade. Your game plan. How to learn smart and avoid dumb mistakes. Your first step is education, but not the kind you pay thousands for. Forget expensive courses. Websites like babypips.com cover the basics for free. Build a solid foundation and practice on demo. Make beginner mistakes without losing real cash. Backtest strategies and learn platform mechanics. Avoid the gambler's mentality and revenge trading. If you lose, don't jump into a bigger trade out of anger. Write a trading plan. Which pairs when you trade, and how much you risk. Example, trade EUR USD 8 AM 12 PM. Risk 1% with a stop loss. Finally, keep it simple. Start with clear support, resistance, or a couple of moving averages. Master one simple strategy on demo before risking real money. My final 2 cents. Think of Forex trading not as a sprint to get rich, but as a marathon of learning and discipline. The journey will be slow and difficult at times. You will have losing days and weeks. Your primary goal is to survive and protect your capital. Always use stop losses. Start very small. Trade money you can afford to lose. Keep a trading journal and review your trades. Be patient. Consistent growth takes time. The flashy lifestyle you see online is not the reality for most traders. It takes years of practice and emotional control to become consistently profitable. If you're ready, start with a demo account today. Begin your journey the right way. Good luck.